The global financial world has always been filled with high stakes, hidden agendas, and powerful players working behind the scenes. But what if one of the biggest banks in the world, JPMorgan, just flipped 750 million ounces of silver without anyone realizing what was happening? A move so massive that it could shake the very foundation of the silver market, and with it, the global economy. This isn't just another piece of market news. It's a revelation that could alter everything we know about financial power and manipulation. For years, JPMorgan has been a key player in the silver market, controlling billions of dollars worth of this precious metal. Silver, often seen as a safe haven for investors, has always had its ups and downs. But now, with the actions of one of the world's largest financial institutions, it's become the center of an extraordinary storm. At first glance, flipping 750 million ounces of silver might seem like just another transaction in the world of big finance. After all, JPMorgan, a global banking giant, has billions of dollars in assets and a reputation for making bold moves. But this wasn't just any ordinary trade. This was a flip of unprecedented size, involving massive quantities of silver that could affect the very price of the metal on the global market. What's even more shocking is that no one really saw it coming. Experts, traders, and even the general public were left in the dark about the true scale of this flip. The silver market, which has always been sensitive to big moves, was shaken to its core by JPMorgan's sudden decision to move such a massive amount of silver. Why did JPMorgan do it? What was behind this seemingly unexpected flip? To understand the full scope of what's at play here, we need to dig deeper into the nature of silver and its role in the global economy. Silver, often referred to as the poor man's gold, has been a staple in the financial world for centuries. It's widely used in various industries, including electronics, medicine, and jewelry. It's also a valuable commodity that investors turn to in times of economic uncertainty. But unlike gold, which is largely controlled by a small number of countries and financial institutions, silver has often been viewed as more volatile and unpredictable. This makes it an attractive, yet risky, asset for investors and institutions alike. JPMorgan has long been known for its expertise in handling large quantities of precious metals, and silver is no exception. The bank has a history of being one of the largest holders and traders of silver in the world. Its role in this market is significant, and its actions can have a massive impact on the price and availability of silver. But this time, JPMorgan's move was different. The scale of the flip was far beyond what anyone could have imagined. So, what exactly happened when JPMorgan flipped 750 million ounces of silver? The truth is that it's not entirely clear. The bank has kept most of the details under wraps, leaving analysts, journalists, and traders to speculate about the motivations behind this massive transaction. Some suggest that it's part of a larger strategy to manipulate the silver market, while others believe that JPMorgan is preparing for a major shift in the global financial landscape. One thing is certain. This move has raised serious questions about the integrity of the silver market. How could such a massive shift go unnoticed by most people? How can the general public trust the stability of the silver market when a financial institution with such enormous power can make a move of this magnitude without anyone being the wiser? As more details emerge, the implications of JPMorgan's actions become clearer. It's not just about the silver market anymore. This is about control. Control over a crucial financial asset that many people depend on for their wealth and security. By flipping such a massive amount of silver, JPMorgan has sent a message to the world. We hold the power. The shocking part of this revelation is the fact that JPMorgan's move could set off a chain reaction that affects much more than just the silver market. The ripple effects of this flip could spread to other financial markets, triggering a wave of uncertainty and chaos. If JPMorgan can manipulate the price of silver to this extent, what other markets might be vulnerable to similar moves? And perhaps most importantly, this flip could expose a much darker side of global finance. What if this is just the tip of the iceberg? Could JPMorgan be involved in even larger, more secretive deals that have the potential to reshape the entire financial system? This is just the beginning. What comes next could be even more shocking as we explore the true extent of JPMorgan's involvement in this $22 billion silver betrayal. Stay tuned as we uncover what lies beneath the surface of this monumental move. JP Morgan's actions have not only revealed the hidden dangers of the silver market, but also raised questions about the future of global finance. As the story unfolds, one thing is clear. This is a financial scandal that could change everything. The question now is, who else is involved? And what does this mean for the future of money itself? As the world's largest financial institutions play their hand in the markets, the reality of just how deep the rabbit hole goes begins to emerge. What if the actions of one of the world's biggest banks were not just a regular trade, but part of a well-planned, multi-billion-dollar strategy to manipulate the global silver market? This is where the story of JP Morgan's $22 billion silver betrayal takes a darker, more twisted turn. The scale of the betrayal isn't just about a single trade or a momentary spike in silver prices. It's about a long-term scheme that goes far beyond what anyone could have imagined. JP Morgan's flip of 750 million ounces of silver wasn't a random decision. It was part of a calculated move to tip the scales of power in their favor, controlling one of the most crucial commodities on the planet. But the real shock comes when we realize that this massive trade wasn't done in isolation. It was the culmination of years of secretive, strategic moves in the financial shadows. Imagine, for a moment, the weight of $22 billion. That's the value tied to this silver betrayal. To put it in perspective, this is not just a big trade. This is a sum so large that it could have a profound effect on not only the silver market, but on entire economies. The implications of such an enormous betrayal are staggering, and yet, it all seemed to happen with little to no warning. How did JP Morgan manage to pull this off without anyone noticing the sheer magnitude of their actions? The silver market has always been a volatile one, subject to manipulation and sudden price swings. But what JP Morgan did next was more than just riding the waves of market volatility. It was a deliberate attempt to steer the ship in their favor. In the world of finance, control over assets like silver means power. And JP Morgan knew exactly what it was doing when it pulled the strings on such a massive scale. Why silver, though? Silver is often seen as a more affordable and accessible alternative to gold. It's a commodity that plays a critical role in various industries, everything from electronics and solar energy to medicine and jewelry. But more than that, it's a safe haven for investors during times of economic instability. Silver has always been a hedge against inflation, a protection for wealth when markets are in turmoil. So, what happens when a bank like JP Morgan gains the ability to influence the price of this crucial asset? To understand this, we need to look deeper into JP Morgan's strategic manipulation. It wasn't just about flipping silver on the market for quick profit. This $22 billion betrayal involved intricate layers of influence, market control, and the careful positioning of assets. JP Morgan knew that silver's price would eventually soar, and they were ready to benefit from it. But rather than letting the market move naturally, they manipulated the very forces driving the price, playing the market like a puppet on strings. The most shocking part of this betrayal, however, lies in the aftermath. What does it mean when a financial giant like JP Morgan can not only control the price of silver, but also affect the wealth and security of millions of people around the world? The ripple effects of this move go far beyond just traders or investors. This is something that touches everyday lives. Think about it. Silver is used in everything from solar panels that power homes to the devices we use every day. Its value, its stability, impacts people in ways they may not even realize. And yet, with one strategic flip, JP Morgan has shifted the playing field in a way that could change the course of the global economy. What's even more disturbing is the fact that JP Morgan isn't just manipulating the silver market in isolation. The bank is deeply connected with other major players in the global financial system, and their actions in silver are just a small piece of a much larger puzzle. Could this betrayal be part of a broader conspiracy that involves other financial giants? Or is JP Morgan just the tip of the iceberg? The betrayal also raises the question of accountability. Who is watching these massive institutions and their moves in global markets? If a single bank can pull off such an audacious move, what other hidden transactions are occurring behind the scenes that the public has no idea about? The fact that JP Morgan has managed to pull off this $22 billion silver betrayal without significant consequences speaks volumes about the power that these financial institutions wield over the markets and ultimately over the global economy. In the coming months and years, as the effects of this betrayal continue to unfold, the true cost of JP Morgan's actions will become clearer. For now, however, we're left to grapple with the reality that one of the most powerful financial institutions on Earth has just exposed the vulnerability of a crucial global market. This is more than just a trade gone wrong. This is a financial manipulation of epic proportions. So what's next? What's the fallout going to look like as more details emerge? Who will be held accountable for this $22 billion betrayal? And what does it mean for the future of silver? These are the questions that remain unanswered as the story continues to unfold. One thing is for sure, JP Morgan's actions have changed the game, and they've done it in a way that no one saw coming. As the dust begins to settle on JP Morgan's shocking silver flip, one question lingers. Who else is pulling the strings? While JP Morgan's colossal move has stunned the financial world, it's becoming increasingly clear that this wasn't a solo mission. The silver betrayal wasn't just the work of a single institution. It's part of a larger, more secretive web of financial manipulation that stretches across the globe. Behind JP Morgan's massive trade lies a network of powerful players, operating in the shadows, with their own agendas. JP Morgan may have pulled the trigger, but who were they working with? And, perhaps more importantly, who is benefiting from the manipulation of a market that so many rely on? The silver market is no stranger to whispers of insider trading and shadowy deals, but the scale of this particular betrayal goes beyond what anyone could have anticipated. This isn't just about a large financial institution making a profitable trade. This is about a calculated move that could destabilize markets, control commodity prices, and ultimately, alter the financial landscape in ways we can only begin to understand. JP Morgan, one of the largest financial institutions in the world, didn't act alone in this operation. To understand the true impact of this betrayal, we need to look at the players lurking in the background, the hidden hands that have quietly shaped this market for years. These are the institutional investors, government entities, and even multinational corporations that benefit from controlling precious metals like silver. But what's even more intriguing is the possibility that these players were all part of a coordinated effort to manipulate silver prices for their collective advantage. Think about the global nature of silver trading. It isn't confined to one country or market. The price of silver is influenced by a web of actors from every corner of the world. From China to the United States, from industrial giants to hedge funds, everyone has their own stake in the game. And in this high-stakes game of financial chess, JP Morgan isn't just a pawn. It's a key piece strategically placed to shift the balance of power in the silver market. It's not just about silver's price. The strategic manipulation of silver is a part of a much larger economic play. While many of the world's governments and financial regulators have been focused on traditional markets, stocks, bonds, and currencies, there has been little attention paid to the undercurrents of precious metals trading. The truth is, the value of silver and other precious metals can be controlled by a select group of institutions, and these institutions hold enormous influence over global economies. And this is where things start to get even more unsettling. Could JP Morgan's massive silver flip be part of a larger scheme that's been unfolding for years, quietly shaping the future of global finance? Is this a financial play that's been in the works for far longer than anyone could have imagined? Consider this. Many of the world's largest financial institutions are interconnected. They share information, trade together, and sometimes even work in unison to influence markets. While JP Morgan may have been the most visible player in the silver flip, it's highly likely that other financial entities were involved, some directly, others behind the scenes. Their combined actions have created a scenario where the price of silver and the control of the global silver market are in the hands of a select few. It's not just the major banks that are involved, either. Governments and multinational corporations have a significant interest in the price of silver. Countries like China, India, and Russia are massive players in the global precious metals market. And when it comes to the manipulation of silver prices, these nations, often in partnership with large financial institutions, can play a pivotal role in driving market trends. Could the collaboration between these nations and financial institutions be fueling the larger conspiracy? Is this a game where everyone has a stake, but only a few are allowed to win? The more we look into the players behind the silver betrayal, the more we realize that this isn't just about one bank or one trade. This is about a system of hidden power, where the true movers and shakers are rarely seen, but their influence is felt across every market in the world. And the most shocking part? These players don't just act for themselves. They act in coordination, pulling off financial maneuvers that affect billions of people, from everyday investors to entire national economies. But here's the kicker. The silver flip may only be the tip of the iceberg. If JPMorgan and its hidden allies are manipulating the silver market, what other markets could they be influencing behind the scenes? What if this manipulation is just a small piece of a much larger puzzle that spans commodities, currencies, and even the stock market? The real danger here isn't just the financial fallout from the silver flip. It's the potential for this kind of market manipulation to spread to other vital areas of the economy. What happens when the same players who control the silver market set their sights on other commodities or even larger financial systems like the global stock market? This is the question that no one is asking. As we dig deeper into the story, we begin to see just how interconnected the world of finance truly is. The silver market may have been the battleground for this major move, but the real war could be much bigger and much more dangerous than anyone could have imagined. In the next part of this story, we'll take a closer look at the ripple effects of this silver betrayal. How does this affect not just investors, but the global economy as a whole? What happens when these hidden players' actions start to have real-world consequences? The answers might just change everything. The curtain has been pulled back, revealing the shocking moves of JPMorgan and the hidden financial players that manipulate the silver market. But now, the real question remains, what happens next? The consequences of this $22 billion silver betrayal are not just confined to the trading floors or the boardrooms of the world's largest banks. They are poised to ripple through the entire global economy, affecting everything from commodity prices to the stability of the financial systems we rely on every day. Imagine waking up tomorrow to find that the price of silver, a commodity so integral to industries from electronics to energy, has surged dramatically. What does this mean for businesses, governments, and everyday people? The silver market may seem distant to most, but its impact on global economies is anything but isolated. This manipulation, this sudden flip of 750 million ounces, has the potential to cause an earthquake in global markets, sending shockwaves far beyond silver. For investors, the immediate aftermath will be felt in the form of price volatility. The silver market, already known for its unpredictable nature, will be even more susceptible to drastic swings. But the real impact won't just be on investors looking to buy and sell silver for profit. It will affect every single person who has ever depended on silver for its practical uses. Industries that rely on silver for manufacturing, such as electronics, solar panels, and medical devices, will see the price of this crucial metal skyrocket, driving up costs and ultimately affecting consumers. Governments, too, are not immune to the fallout. Countries that rely on silver for industrial purposes, or those that hold large reserves of silver in their central banks, could be directly affected by the price manipulation. Imagine a nation that has carefully managed its silver stockpiles to maintain economic stability. If silver prices suddenly rise uncontrollably due to market manipulation, these nations could find themselves with billions of dollars in sudden losses or windfalls, depending on their position. But even the smallest fluctuations could lead to economic instability, particularly for emerging markets that rely on affordable resources for their industries. And let's not forget about the ripple effects in global trade. As silver prices increase due to this financial manipulation, companies and industries such as technology, automotive, and energy may face higher production costs. These costs will ultimately be passed down to consumers, potentially sparking inflation. With the global economy already dealing with inflationary pressures and supply chain disruptions, this silver crisis could add fuel to the fire, making things worse for everyday people already struggling with rising prices for goods and services. But the consequences of this betrayal go far beyond the immediate market shockwaves. When a financial institution like JPMorgan can manipulate the price of a commodity like silver on such a large scale, it raises serious questions about the integrity of the entire financial system. If one bank can control the silver market with impunity, what's to stop them from manipulating other commodities? What about currencies, stocks, or even entire economies? The fact that such a massive manipulation could go unnoticed for so long reveals the inherent vulnerabilities within the system. Financial regulators and governments will be under intense pressure to take action. The big question is, what can they do to prevent this from happening again? The silver betrayal shines a light on the deep flaws in the current financial regulatory framework. If powerful institutions like JPMorgan can control the prices of precious metals without facing real consequences, how can we trust that the financial system is fair and transparent? Could this be the beginning of a new era of unchecked financial power, where global markets are influenced by a handful of elite institutions with their own hidden agendas? What's even more alarming is the possibility that this manipulation is just the beginning. If JP Morgan and its hidden allies have the power to control the silver market, what else could they be secretly influencing behind the scenes? The manipulation of silver might only be the start of a much larger financial strategy, one that extends far beyond commodities and precious metals. Could this betrayal be the tip of the iceberg in a much more significant global financial restructuring? The truth is, we may not fully understand the full scope of the silver betrayal until months, or even years from now. The full consequences of this manipulation will unfold slowly as the global economy adjusts to the aftershocks. As silver prices continue to fluctuate and other markets react to the disruption, the world may start to see the true extent of the damage caused by this massive betrayal. So, what does this mean for the future? One thing is clear: the financial world will never be the same again. The next few months and years will reveal how far-reaching the effects of JP Morgan's $22 billion silver betrayal truly are. And as the story continues to unfold, the world will be left grappling with a single, unsettling question: who is really in control of our global economy?